Hello, ladies and gentlemen, and welcome back. Well, 2022 has been the year trying to fight inflation for the central banks around the world. That is, except for one, the Bank of Japan. While every other central bank is realistically trying to stop the inflation, they're trying to cause deflation, and it's not working. In fact, these levels that we're starting to reach now have dire consequences should they fail, and we're expecting intervention very, very soon based on these charts. So join us today as we cover Tesla earnings, the double top that could be forming here on the S&P 500 and what it means for the markets moving forward. And of course, we're looking under the hood, dollar index, crypto, commodities, and everything else. See you soon, guys. Well, welcome back everybody to the Daily Show where we discuss markets around the world. Let's begin with some news headlines, then we'll get into some data points, and then we'll look at some earnings and key levels that we should be watching right now in the markets. Yen traders on alert as intervention is potentially here at 150 per dollar. So this is 150 yen per US dollar. We're reaching levels that haven't happened for 32 years. Yes, what the Japanese central bank is doing, which we'll look at later in today's video, is incredibly dangerous. And in at least historical terms, this never tends to end very well. Tesla came out with its earnings and on the surface, they look really good. The problem is the expectations. They missed the expectations. They were down over 6% after hours. And this is the problem with really crazy expectations. I think they had they were meant to get 60 something percent higher sales than a year ago. They managed to do 50% higher than a year ago. That's still a great number there. And the company delivered 343,000 cars in the quarter, a record that was up more than 40% from the same period last year. So in essence, it's a good company doing good things and it's having a lot of success, but Wall Street wanted more. And that's the story of the markets. The expectations are just incredibly high. And we saw that initial reaction when Netflix beat by a lot. We've seen a strong reaction to the upside. We'll look today, but Tesla at this stage down. Let's talk about high yield bonds. Now, a lot of people don't follow these, but I just want to show you guys when the bonds market is above or when it is below the 200-day moving average or the 200 moving average here. You'll notice that it makes a big difference. So the bond market is currently below this moving average. If we take the period of history when it's above and look at the S&P 500 cumulative percentage, you'll notice it's pretty damn good. It actually does very, very nicely. Why you should be paying attention to the bonds market and why I brought this up is because all of a sudden, when you're looking at S&P 500 percentage gain after it goes underneath the 200-day moving average, it's not so good. It's actually a lot more negative than you would hope. And this just tells you that using the power of bonds, using the power of yields in especially the next 12 to 18 months, which we do here on this channel, so make sure you subscribe, will be so important. So massively detrimental to not look at those markets if you're not paying attention to them. Smart money versus dumb money continues to rise here a little bit. This is actually just taken from the previous session that we did. But basically, we want to see smart money coming down and dumb money coming up. And usually on these inflection points, we've effectively had very significant turnaround. So if we are going to continue a squeeze, we want to see something like that happen. And of course, we'll be following along should that occur. More than half of the days in the past 2 months have had extreme breadth. Now, a lot of people would know breadth and thrust is one of the best indicators traditionally to use when it comes to turnaround stories or even weaknesses. Now, the percentage of days here with over 80% or less than 20% of New York stock up volume has been wild. And this is just showing you how broad-based some of these moves are. If you actually look at some of the previous stats where we've had some of these readings, again, it's symptomatic of very unsure markets, very tumultuous markets. And there's only a few readings we've ever had like this. In general, past this reading, the next week has been 80% positive with an okay percentage actually return. Even during 2008, we actually got a positive after this particular read. So that's an interesting point. But it was also 2008, 2009 that we synergized very well with right now. And overall, the percentages were still quite negative moving forward after such a reading as this. It shows you that the market has absolutely no idea. And what this is most likely high frequency trading. The one good sign for bulls, at least people that are feeling a bit more bullish about these lows, has to be this percentage of S&P 500 issues registering a new low. Now, this is taken from a few sessions ago when we talked about it, but when we saw similar reads to this in the past, we basically had potential turnaround stories where effectively the markets were not weakening at the same level that they were. So it wasn't that mass fear sell-off. It was just specifically some stocks selling to new lows, and the rest of them were actually finding some form of support or buyers. After we got such a signal, which happened a little while ago now, about a week ago, we tend to read into a little bit of bullishness here. And again, it's a fairly good one because we have a lot of data set. So the data set going back over almost 100 years, we've seen this a lot of times, and historically it's been much better than a coin flip with calling new pickups. Is it at the right time of the year? Well, of course, the end of October into November can be a seasonal turnaround event. Historically, we go into what we call the Christmas rally or the Santa rally. Will we have it this year? 2022 has been the year of doing very strange things, so of course it may not happen, but it's important to have those stats there. Here's 200 years of bear market data. Pause the video if you want to have a look at that one. And these are the most synergized markets currently, with most of the synergized markets showing potential turnarounds at this point, except for, of course, the famous one, which is 2007-8. So we're in earnings season, and we've just had Tesla come out. IBM, I believe, did okay, but Tesla, while it did very well, didn't beat the expectations, and that sent it down. Now, this could be an opportunity for people that believe in Tesla over the long term. We'll talk about the charts a little bit later, but I did want us to bring up our normal earnings beat data because we're back in Q3 now, and we've got a 66% beat rate with 77 beats and 40 misses so far through this earnings season. Remember, historically, around that 68 to maybe 76 kind of percent is a very common beat rate for a healthy market. And if the market does continue to do okay, which it's doing okay right now, then we might see some higher prices, followed by, hopefully, a bit of a short off after that zone, because of course we still have a lot of problems in these economies right now. So just before we jump into the charts and take a look at the key levels we should be watching right now, I want to say a big thank you to today's sponsor of the video, which is Tiger Brokers. Now, we're in earnings seasons, guys, and this means that, of course, we need premium news and we need news at our fingertips. Well, good news is Tiger Brokers has a bunch of premium feeds and a bunch of news feeds that come out, and you can see them all in one place. You can also get your watch lists, which means that you can see all of your specific stocks in your watch list, and remember the economic calendar as well. Daily, weekly, monthly, you select the way you want to view it, and you can also select the market that you wish to know about the information coming out. You can also select your watch lists and positions within this platform. On top of that, you also can dive into your stocks. So remember, when you have something like Tesla up here, let's say you want more data, you can find out the filings, the summary, the shareholders, the dividends, all that information is right here within the platform. So always make sure to have a good broker. And of course, if you're interested, you can find out more about Tiger Brokers and the special offers they have down below in the description. Remember, for the Australian audience and New Zealand audience, there is a special offer for FX Evolution community members, 40 free zip stocks when you fund the account, open and fund the account with less than I think you just need 1 cent or more. And yeah, why not give them a shot? And for everyone else around the world, there's a bunch of other offers for you as well. So let's talk about these charts, and we'll start off here with the Japanese 10-year. This is the 10-year yield. And basically, to really get us all caught up with the Bank of Japan, they're trying to hold this at 0.25. They're trying to stop the yield going higher. Now, I mean, yes, 10-year 0.25. Now, remember where the 10-year is for the US. We're looking at 4.14. So what the bank is doing, the Bank of Japan, is literally artificially trying to hold this level. And I just don't see how this ends well, guys. Look at the yen here on a scale. So this is a daily. Now, we already talked about how this was significant, and all of these levels actually have been incredibly significant. If we go on a weekly, take a look at this vertical move that's occurring here. This is when central banks doubling down, and this would be costing trillions of yen. I mean, it is going to be getting wild. 150, a huge barrier. No doubt intervention will come at some point over the next couple of days. But the more important thing is, can they continue to afford doing this? Be incredibly careful on yen shares, guys. The squeeze is on, but once they do something, let's say the central bank has to fail and they have to let it go, which has happened once before. And I want to show everyone in the audience, just to warn you away from taking excessive risks, what can happen during these types of interventions. When you have a central bank with a policy that's effectively trying to hold something, this is what happens when they let it go. Now, a lot of you haven't been around this long in trading. Some of you have. Congrats if you saw this. Hopefully you didn't get involved in it. But there used to be a pegged floor. This was the Euro Swiss, and they pegged it at 1.2. One day they said, we can't afford it anymore, guys. See ya. That's it. There was no announcement other than that. Just like, oh, we can't do it anymore. And it just got smashed. And what you're seeing here is the culmination of basically 1 to 3 minutes. It happened so fast. It blew people's accounts out backwards. It was just absolute madness. And of course, this is one of the maddest days I've ever seen in trading, because what you're seeing here on the chart and what the reality was, there was no orders underneath, and we end up having illiquidity, and some platforms were printing 0.46. So that reading went from 1.2 to 0.46 within literally seconds. It was wild. And that's the type of thing that happens with manipulation to that degree. Be very careful out there. I had to bring this up. That Bank of Japan situation, it could spill over. It could become a serious problem, and we have to be aware of it. Let's talk about the VIX. We'll go through here. Volatility is 30.76. Nothing really to mention there. We'll go over to 2-year yields. Why the stock market's coming down? The easiest explanation is yields continue to rise. We're seeing here 4.574. And I said I'd update you guys. Look how close we are now to the April 2023 read of basically the Fed having to be at 5%. Yes, we're seeing yields continuously spike. We need these to turn around for the stock market to continue up. That's just how it is. If yields continue to spike and the stock market's going up with it, it's very likely that the market will fail. And that was a false move to the upside. So remember, use this to synergize with your market conditions. We talked about high yield bonds, or bonds in general, showing us some of the way. Well, bonds didn't like the previous session. Of course, another increase in yields. That's not going to be good for high yield corps. And we're seeing again a lower high at this stage with no breakout. If we want the market to go up, we need high yields to come with them. And in this case, we're not seeing that just yet. So continue to watch the high yields, and we'll watch corp grades as well in the next couple of videos. But yeah, there was a turnaround. It's not looking super positive, but I wouldn't say it's giving us too much edge. Let's move over to the US dollar. So we know that the US dollar is the #1 favored currency in the world. Usually, the main currencies that we use to hedge was the Japanese yen. Yeah, right. We're not going to use that right now, are we? We're going to use the US dollar. We're going to use the CHF, and actually gold, which is I treat as a currency. We're considered a lot of the hedges. At the moment, it's really just USD in 2022 so far. So we're back at this peak. Let's have a look at the smaller time frames to understand what's going on. So you'll notice I've got some alerts here underneath these lows. And the reason why is I'm looking for the market to take these lows and then potentially find weakness past those points. I want to see the market actually turn. I don't want to, predict this. Obviously, I want to have the patience to react to the market actually taking a low. At this point, these are the two levels that I'll be focused on for the dollar index over the next 24 hours. Of course, you guys need to practice your own risk management, but this is just the potential here in these markets. We're at a supply, and you can see that based on the previous structure and the way it broke down. So we're here, we're testing a key resistance effectively. We need to see a turnaround. We have none yet. The euro is very similar. We're at a key level. You can see that it's come back down over the last 24 hours. We saw that weakness, and now what we're looking is probably a swing, kind of like this. I'd like to see a 97.80 taken, a new low formed here, and then potentially we can start to look for the longs. At this stage, still euro is weak and dollar is strong. Okay, so we don't know anything different until that happens. I'm not going to mention too much about gold. It did weaken off that level. We saw a series of lower highs coming through. I don't really know how much edge there is in gold around this level. I'm looking more at the US dollar. We'll come back to gold. The overall arching kind of concept, though, is we broke through that 1680 zone. Once we did that, we could be moving down to more significant levels such as 1570 and even 1518. I'll say this. Gold hates yield increases. If yield continues to rise, gold will be unhappy with that. Let's talk about oil. And this was quite a decent thing. So we had a very nice short off in the previous session. We've come back to that exact level we talked about in the previous video. This is where we want to see oil weaken. So it should be around that zone. It also is consistent potentially with this downward trend that we've had so far with the series of lower highs. So we've got a trend line down, we've got a weakness, we've got a previous supply, we've got a breakdown already to not really a consistent zone, and we're looking for it back into ideally that $80 a barrel. So can oil weaken? This is the zone that you would hope it does weaken if it's going to. Let's move over to XLP. Oh, just on oil as well. If it makes a new high, that will be very significant because that basically means that it's trapped a lot of shorts, and it usually, because it's also breaking out of a trend line, that will usually spell a complete reversal back up to around that 89. So this is such an important zone. What happens here is key for oil. It's actually looking a little bit better than it was. XLY, XLP, this shows us consumer discretionary versus staples. At this stage, basically people are still willing to take a little bit of risk in this market. You can see it was slightly green on the session. Not much to report home about. Tesla, no gap filling after that news. So we've still got unfilled gaps up here, and we're back in at the time of recording. We went down, I think, around 6%. So we were moving back into this 208, 206 kind of area. And yeah, it was, I guess, a good result with disappointing expectations. And that's the problem with these growths sometimes. We're looking for the market to come back down. I would have loved to see it come and tap those 180s. Of course, people will like it also on this level. And if stock markets are willing to move around the next 24 hours, it could easily bounce off this zone. So be careful out there with Tesla. But at this stage, yeah, a week kind of after hours, we'll find out whether it can find instantaneous strength or whether it wants to move down to that 180. Apple, nothing to report here. We didn't make a new high past 148. We did have a decent session. It actually opened down and ended up bullish. And that's impressive considering the stock market was down overall. So yeah, very interesting Apple movement. Not much to report from Apple itself. Netflix had a great day. Of course, it was up 13% by the close, was up a lot more than that during the session. And you would think that at some stage you probably move to fill this gap, but very, very nice return. It just shows you when you're patient, and especially when you wait for those bases to form, how the market is preempting itself. Look at the volume down here. Remember, Wyckoff's law of effort was that he wanted to see effort remain fairly high through the accumulation bases as it was through the drop. That's exactly what happened here, and it's a good example of that. The UK 100, the FTSE, hasn't broken a new high, nor has it broken through this low and closed below. We're looking for this to show us potential watershed moments. We'll be watching that in the future. The DAX hasn't quite hit our downward trend line, which has been very consistent here in 2022 so far. We haven't hit it. We're still in a swing kind of high, the lightning bolt. We've got the trough, peak, high trough, potentially move up into here. Still looking for that kind of strength to potentially come back into the market. But let's now move over to the big ones. Let's start with the Russell 2000, and we'll go through some US markets here. Yep, it's broken down. Now, a lot of you will say, well, look at that trend line, look at that short. And in the last 24 hours, absolutely, the short was the way to go. And we mentioned that really razor thin US 500 level, and it sold off. And if you got into it, congrats. Now, I still think this was an interesting and fairly decent kind of potential take profit level for something like the US 2000. It does look weak. Now, it can change. You're looking for probably a low to be formed and then take that high, as in go past 1730, or turn here and take this high, which is about 1742. Both of those high takes should signify further strength. If we go over to the S&P 500, you can see here the way it closed, the daily, how it closed. Again, opened down. Overall, it then went down up, and then it went down further, and it kind of ended as, what do we know? A long leg doji. So it doesn't really give us too much edge in terms of this market at this stage from an S&P 500 standpoint. Let's have a look at the 15-minute. You can see it's come down to that previous unfilled gap, which we can now close because that's now filled. And then we rallied off that level. So for some people, when they're looking at the US 500, they're going to be looking at it as a double top pattern. And fair enough, we've got a double top potential here. We have the sell-off that's come through with some nice rejection wicks. We come down into this structure level, we find buyers, and then we've sold off again. For buyers to really show commitment, these are the levels that you're going to need to move to. You're going to need to get above here or above that 37.31. That's where buyers should show real recommitment. So a new low, breach that. Nice. New low, or actually not even new low, just breach this straight away. Nice. They're the two signals that at least show us that this market is willing to make a new high. At this stage, I don't blame double top players to be saying double top, take the distance, and then extrapolate that out. So if you're looking for shorts here, at this stage, you're looking for it back down into here. And I would guess that it will, well, the gap is obviously 35.84, but 3600 remains a very good point of equilibrium through this market. So somewhere between this level will probably be where it is, should the market actually start to collapse again. I'm looking for buyers, though, to show commitment right here. I want them to show the commitment. They've got to show the commitment. Otherwise, we're going down. So for buyers, you're probably not triggering anything just yet. You're not seeing that action, but you're looking for some nice turnaround stories from the potential here in these markets. Yeah, it's a very interesting market right now. Let's move over to the NASDAQ. NASDAQ making new lows again. Looks like a double top. Came off that anchored VWAP we discussed the other day. We've seen that breakthrough. We've seen that initial rally, and then we're selling off at the stage of this. Now, from this market, again, if we took the distance, we're looking for the market to weaken in the direction of trend down back into these levels here, back into this 10,700. It's very possible that's what happens. For bulls, you need it to turn around again to take these highs. Look at the S&P 500 though. It generally is the better indicator over the US 100 from an indication standpoint. Never discount the S&P. It's the way to go. What about maximum pain? Well, does this work within the maximum pain parameters? Remember, it's third week options expiration, guys. It's all happening right now. And we know that come Friday, we're still seeing a 375. 360 remains still a large put level. We're at 4.76 million units. So quite a lot of options sitting around. And we're looking for these levels to hold. So 370 as well, getting decent amount of puts put on it, more than the calls. So you would think that these 360, 370 levels will be very, very important come the Friday expiration. If we take a look at the 19th, we see 369 as the max pain, and they did a good job extracting that. There was quite a lot of calls through that session, and you can kind of tell why they would push it down. We end up finishing up here. It's a beautiful thing for the market makers, isn't it? Those market makers, they know how to make some cash when there's a decent amount of options outstanding, and they did it. They got that max pain. If we look at Bitcoin, it just looks pretty bad. I mean, we're at that last stand level that traditionally has held some buyers. It's very consistent with the S&P 500. We need them to pretty much start to turn to the bull side fairly quickly should we actually be looking at that. I'm not trading too much crypto at the moment. I just think it's a nasty chop. But this is the way you look at it. It's just so many dojis and long legs and all sorts of things going on. Very tough, choppy market here unless you're on the small time frames. So no clear signal. I'd be looking more at the S&P 500, and if it starts to strengthen and show the right signs, then there's a good chance that Bitcoin will react with it. For the news ahead, there's not too much information coming out. We basically got Philly Fed Manufacturing Index, 8:30 a.m. New York time for everyone out there. Not much else really happening here, but yeah, that's the news for the week at this stage. As always, guys, if you're interested, and especially if you're from Australia or New Zealand, remember we do have a special promotion with Tiger Brokers where you can get that special offer of the extra 40 zip stocks. Definitely check it out in the description down below. And if you're in earnings season, why not just open an account and use the platform for what you can use it for? At least it's got a great calendar. And of course, on top of that, it has a great headline kind of tool with your watch lists, etc. Thanks so much for watching. Subscribe, smash that like button. We'll see you in the next one. Bye for now.